When people think about winning investments in artificial intelligence, they usually go right to the same well-known groups. They often look at chip manufacturers, cloud providers, and the companies building large language models. These areas naturally make sense because they are the foundation of how artificial intelligence runs. However, the big question that many investors miss is whether the true wealth will actually come from a different group altogether. Instead of being made by the companies that build the hardware or the basic models, the real money could very well come from the firms that make artificial intelligence practical, useful, and integrated into everyday decisions. This is where Palantir Technologies comes in. Palantir occupies a very unusual and powerful position. The company specializes in taking huge amounts of raw data and turning that into actionable knowledge that helps governments, businesses, and organizations make billion-dollar choices with confidence. While most companies offer tools that simply store data or create dashboards, Palantir positions itself as the company that turns chaos into clarity. In other words, it provides decision-making power from information that would otherwise overwhelm organizations. That said, there is a catch that investors need to be aware of. The stock trades at an incredibly high valuation. Right now, Palantir is priced at 118 times trailing 12-month sales. To put that into perspective, ServiceNow trades at 16 times sales, and Snowflake trades at 15 times sales. This means Palantir costs about 7 to 8 times more than these already expensive peers. Such a high price assumes Palantir will achieve nearly flawless execution, along with massive market growth that might not even exist at the size people are betting on. The question is not whether Palantir's software works, because it absolutely does. The real issue is whether any software company can truly justify such a steep valuation, especially one that makes other growth stocks look cheap by comparison. Unlike many of its competitors, Palantir is not just building tools to monitor or collect data. Its focus is on solving the deeper issue of how to turn endless amounts of information into an advantage that helps organizations act smarter and faster. This is accomplished through its ontology framework, which goes far beyond organizing data. It creates a system known as a read-write loop. This loop ensures that every interaction within the platform actually improves the system itself. With each use, Palantir's software becomes smarter, more efficient, and more valuable. This approach explains why the company's numbers have been so strong. During Q2 of 2025, Palantir achieved a revenue of $1 billion for the very first time in its history. This represented an impressive 48% year-over-year increase, which also marked the company's strongest performance in the past 4 years. The Rule of 40 metric, which combines revenue growth and operating margins, reached 94%. In the software industry, that kind of performance would make almost any chief executive officer envious. Even more telling was that United States commercial revenue soared 93% year over year, proving that Palantir is no longer dependent only on government contracts. The company is showing it can thrive in the private sector at scale. The practical uses of Palantir's technology highlight why customers stick around. For example, Tampa General Hospital was able to cut patient stays by 30% after implementing Palantir systems. On a very different level, Palantir's software also played a part in gathering the intelligence that ultimately led to the capture of Osama bin Laden. These examples show how the technology impacts both human lives and billion-dollar outcomes. When an organization relies on software that is so critical, the switching costs become massive. Customers are not likely to leave because the platform becomes deeply embedded into essential decision-making. In fact, the average Palantir customer spends over $1 million every single quarter. This is not just because they are locked in, but because the platform becomes indispensable over time. This is what separates Palantir from normal software as a service companies. Its implementations touch nearly every part of an organization. From managing supply chains to conducting threat assessments and guiding strategy, Palantir embeds itself across the board. This explains why customers are willing to spend so heavily on it. The real stickiness of the platform comes from its unmatched ability to deal with any form of data. It can handle structured databases, satellite imagery, readings from sensors, and even analog inputs such as temperature or pressure. The software not only processes and cleans this information, but also uncovers hidden relationships and patterns. On top of that, it applies machine learning to generate insights that are actually usable, not just theoretical. Competitors such as Amazon Web Services, Snowflake, and ServiceNow all play a role in this broader ecosystem, but none of them deliver the complete package that Palantir offers. They may provide storage, monitoring, or analysis, but Palantir delivers a full ontology framework that transforms raw information into intelligent guidance. That is why so many customers view Palantir as an essential platform rather than just another tool. Still, there is no escaping the uncomfortable truth. The stock trades at around 118 times trailing sales. That is an enormous premium. Even if Palantir executes perfectly and continues expanding its market, the mathematics of this valuation are challenging. At some point, even rapid growth may not be enough to justify such a high multiple. Morningstar analysts predict Palantir can grow revenue by about 40% each year through 2030. This would mean increasing revenue from about $4.2 billion today to $21 billion by the end of the decade. On the profitability side, generally accepted accounting principles operating margins reached 27% in Q2, while adjusted operating margins were even stronger at 46%. This shows Palantir is finally moving closer to consistent profits after many years of losses. Yet despite this progress, Morningstar's fair value estimate is $115 per share. That is much lower than the stock's current trading price of around $160, which means investors are already assuming results that exceed even optimistic expectations. In a very bullish scenario, Palantir could potentially capture 3% of a total addressable market worth $1.6 trillion. If that happens, the stock could reach $280 per share. However, that outcome requires Palantir to dominate its space on the same level that Salesforce dominates customer relationship management. That type of dominance may not actually come to pass. Competition also remains a serious risk. Technology giants such as Alphabet and Microsoft have both the scale and resources to build their own rival systems. These companies already have distribution channels and established customer bases, which could make it easier for them to pressure Palantir's margins over the long term. Meanwhile, the increasing availability of large language models may lower barriers to entry, allowing smaller competitors to challenge Palantir's edge. If this happens, Palantir's unique advantage could diminish. Because of these factors, investing in Palantir comes down to two very bold beliefs. First, you must believe the artificial intelligence revolution will be even larger and more disruptive than the current hype suggests. Second, you must believe that Palantir will capture an unusually large share of the resulting value. Both ideas could end up being correct, but investors need to recognize that these assumptions are already reflected in the current stock price. In short, Palantir technology stands out in the artificial intelligence space by transforming chaotic data into actionable insights for governments and businesses, and its ontology framework makes the software smarter with every interaction. The company reached $1 billion in revenue during Q2 of 2025, marking 48% year-over-year growth and a 93% surge in United States commercial sales, proving strong momentum beyond government contracts. Customers spend heavily because the platform becomes essential, handling everything from structured databases to satellite images and sensor data, with machine learning applied to deliver practical results. However, despite its clear success, Palantir trades at a staggering 118 times trailing sales, far above peers like ServiceNow and Snowflake, and even optimistic forecasts assume near-perfect growth in a market that may not expand to the required scale. With Morningstar estimating revenue could grow from $4.2 billion today to $21 billion by 2030, and fair value at $115 per share, compared to current prices around $160, investors must weigh whether the stock is worth its lofty premium given rising competition from major technology companies with major volatility. Investors should be ready to handle both the upside and the downside. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.